Ever wanted to get paid dividends for just owning land? Well, you too can join that exclusive list when we get into the top 2 stocks of the week. Each of these picks should be on any investor's radar for some great returns. One is a monthly paying dividend company, and another is a leader in the industrial space and is a dividend king with well over 50 plus years of dividend payments. You've heard of Disneyland and Pakistan, and now you've heard of land, ticker symbol LAND. Gladstone Land is a REIT that owns farmland and vineyards. Farmers are the backbone of this country. The company owns 169 farms totaling 115,000 acres in 15 states. The company has a blistering 100% occupancy rate, and leases can vary anywhere from 3 to 15 years, with the average agreement right now having about 7 years left on it. That's because companies know you need that precious green land to produce healthy foods, fruits, vegetables, nuts. The company actually believes that growing these items is much more profitable than other commodity crops like corn, wheat, and soy. This includes having higher profits, lower volatility, lower government dependency, which is always good, less storage cost, and they're also closer to where most of the population actually lives. Now, despite what some Gen Zers might say the population of the Earth is...
How many people are on Earth? Around how many, if you had to guess?
I don't know, 200 trillion, something like that.
Do you know how many?
Yeah, the actual population of the Earth is closer to 8 billion, but at least they were close, right? That's more mouths to feed, and that's more land that's being used for human activity, and less that's available to farm. You know that supply and demand. The less land there is, but more population, that's not a good fit, meaning existing property will get that much more expensive. Now, they've done research, and they have found that US farmland has experienced equal or stronger results with lower volatility than the S&P 500 and the US REIT index. That's absolutely amazing. But not everything is coming up roses for land. One thing you have to be careful about is the fund is heavily exposure to California. With 63 of its farms, that's nearly 40% of its portfolio alone being found in California. And while California land prices have gone up over time, as with anything in California, there's always more than meets the eye. Throughout the history of Earth, there has always been extreme weather events like droughts, fires, and temperature changes, all factors that could certainly impact farmers. As with all real estate investment trusts, rising interest rates are also a concern. That means it's going to cost more money to borrow money and make new acquisitions. Glad is one of the smallest companies I have ever covered, with a market cap that is not even $1 billion. It currently only has a market cap of $800 million, despite existing since 1997, and it IPO'd in 2012. Land has done quite well, being up 170% between 2013 and 2022, not including dividends, but the stock has dropped dramatically since April, down nearly 15%. This could be attributed to the increase in share count since C19 started, or the company's long-term debt, which is almost as much as the company's market cap. Nevertheless, the company has an excellent track record of 114 consecutive monthly cash payments to its shareholders. The company's dividend raises and starting yield at just 2%, they're not the greatest, but this really is a chance to get in on an asset class that is pretty unique. I'm pretty sure there's nothing else in your portfolio that can compare to this. It's pretty hard to get into the farmland game, and this is certainly a way to combat Billy Gates' plans for world domination. We always know this will be a need. It's given solid results in the past. Now let's see if they can keep it up. One company that has a 58-year history of paying increased dividends is Illinois Toolworks. This is a manufacturing company located in Iowa. Just kidding, it's in Glenview, Illinois. This company is known for its 80-20 principle, meaning 80% of revenues are generated by 20% of its customers. Its business is built on maintaining these relationships. We see a lot of companies these days being spread way too thin, being involved in too many products, where it actually hurts the business. Here with Illinois Toolworks, they're actually focusing on the big money makers and making sure that gets most of their attention. ITW has been in business since 1912. Now, the company is really just a holding company of different manufacturing companies that specialize in tool making in 7 different business segments. This includes automotive, construction, food equipment, polymers and fluids, specialty products, test and measurement, as well as welding. They brought in $15 billion in revenue last year with 24% margins. That's not too bad for an industrial company. And their arsenal, it also includes 19,000 different patents that they have the exclusive rights to. The company sounds quite similar to 3M. It's a diversified industrial company with an amazing track record of dividends. But based on what I could tell, it doesn't have that dark cloud hanging over its head in lawsuit after lawsuit. So perhaps those trying to reallocate some of their industrial sector money, this might be a good solution. ITW is also a stellar dividend company, paying increased dividends for 58 consecutive years. That is an outstanding track record, and the company's payout ratio is only about 58%. This means the company continues to provide products that are in demand regardless of the boom and bust of the market. ITW has also smoked the market in the past 10 years, returning 330% compared to the market's 242%. Not only are we getting a reliable dividend company, but this is a company that can also give us amazing capital appreciation. Now, I have no idea why this company doesn't get more love in the dividend community. It's a large company at a $64 billion market cap, and it has a starting dividend yield of 2.5%, which isn't that bad given it's raised its dividend around 15% each of the last 5 years. Now, ITW stock, it might actually be on a little bit of a discount, down 17% on the year, as the company was certainly hit hard with supply chain issues, inflation, and just overall commodity prices going up. But a good investor knows this is a buying opportunity when one has a long-term outlook, getting a fantastic business here. All right, investors, I put on your radar a very unique asset class that pays monthly dividends in Gladstone land, as well as a dividend king that might be a good alternative to 3M and Illinois Toolworks. If you want to help out a small-time YouTuber, make sure you hit that like button and make sure you're subscribed. I'd love to hear your opinion on these 2 stocks. Now, make sure you're always doing your own research. Watch my videos in podcast form under the Collect Cash podcast name. I will be traveling for work these next 2 weeks, back to back, so I'm not sure if I will have time to put out another video unless I film something real quick in the hotel room. I guess we'll see. Catch you on the next one.